everybody. Chase Bassett here with Ellerbrock-Norris. I hope everybody's having a good start to the year so far. Today I want to shoot the first video of an educational video series I'm going to put together around alternative ways to finance risk outside of the traditional insurance marketplace. And what I mean by traditional insurance marketplace is you pay a set premium to the insurance carriers every year, and regardless of how many claims you have, they're not going to require you to pay in any more in premium. And if you have less claims than average, they're not going to pay you any money back. So I want to talk about some of the strategies outside of that, really to help you take more control of your insurance program. And the specific program structure I'm going to focus on and discuss is captive insurance. And again, I want this to be educational. So, we realize that captives aren't a fit for everybody. And, we're going to talk about some of the drawbacks of captives and reasons that you shouldn't join a captive. We're going to talk about some of the benefits, certainly, some of the myths and negative connotations that captives have, as well as some of the common concerns that we hear from individuals out in the marketplace. So I just wanted to set the stage for the educational series to come. I'm going to try to keep these videos between about a minute and a minute and a half, so they'll be short and sweet. So stay tuned for more to come, and have a great day. Thanks.